We think the RBA will cut rates on February 18. And it's been a particularly long wait for me and for us here at Nomura, because I had to go back through my records. We forecast that the RBA would cut rates in February back in late June. So it's been an especially long wait. But the key thing I'd say about this coming rate cut is it's a rate cut which moderation in inflation allows. We don't have a screamingly weak economy which is crying out for rate cut relief. So we think, yes, they will cut rates, but it's more likely to be a hawkish rate cut. I don't think the RBA governor will signal that there's a bunch of rate cuts coming immediately to back up this one. And I think they will still say the job's not quite done on inflation. So it's a very cautious rate cut, just a first step. And I think that ultimately it's the quarterly CPI outcomes which are going to be key here for the RBA to give it increasing confidence that inflation's headed in the right direction. And so, ironically, while we think the February meeting is very live and we expect a rate cut, I'm pretty confident they're not going to go back to back, and we're quite confident they're not going to cut rates in April.
Also, ironically, could a cut from the RBA, Andrew, actually support the Australian dollar, which of course has been, boxed and hit from all sides by negative headwinds? But if indeed that rate cut does help support growth here in Australia, might it be positive for the Aussie?
Look, it could at the margin, and particularly if it's a hawkish rate cut as we're expecting, with little guidance that further rate cuts are coming. Aussie, really interesting to reflect on the Aussie dollar. We would say it's likely undervalued, certainly relative to traditional metrics like commodity prices and rate spreads. It's really clear to us that the key drivers of Aussie lately have been global themes: the strong US dollar, underwhelming China macro performance, concerns around tariffs. Those sorts of things have been the primary driver of the Aussie. But the underlying fundamentals are positive, and the market is also short. So there is scope for the Aussie to do better, we think, later this year, but we really just need some sort of catalyst to get the ball rolling on that, and for some of those positive underlying fundamentals to be allowed to come through.